Welcome to AM Best Audio.
Reinsurance costs and capacity constraints have moderated for Caribbean insurers amid an accelerated softening in property reinsurance pricing and a modest relaxation in some terms and conditions. That according to a new AM Best report. I'm John Weber for AM Best TV. I'm speaking today with the co-authors of a newly issued report on the Caribbean insurance market, Director Bridget Maehr and Director Modica. And Bridget, we're going to start with you. The report notes favorable results for Caribbean insurers through the end of 2024. What's driving that?
Well, some of it has to do with the fact that there was a low cat year. We haven't had as many storms, and if they were intense storms, a lot of them had stayed out to sea with minimal impact to the islands. Reinsurance cost has moderated, so that is contributing to the results, as is rate increases. A lot of the insurers have instituted significant rate increases on property and motor, most notably in the motor business.
So catastrophes are key for any insurance. What does that mean for Caribbean insurers?
Well, just from them being in the middle of the ocean, they are prone to hurricanes. The hurricanes, even if they're not a direct hit, there can be impact from storm surge and winds. So underwriting is important, making sure you understand your exposures, and also to have proper reinsurance in place to protect capital in adverse situations.
And tourism and exports have always played a part in the region's economy. Are global economic conditions and tariffs in particular having an impact?
Yes, so global economic conditions and tariff developments are influencing the region's economy, but this is primarily through indirect transmission channels rather through direct exposure. Economies in the Caribbean are broadly underpinned by either tourism or commodity exports. So factors that impact demand conditions in these source markets would impact growth. For example, softer economic conditions such as a slower labor market or slowing income would impact discretionary travel spending. And this would be particularly impactful if this happened in major source markets like the US, Canada, or the EU. And softer labor market conditions, slower real income growth, or heightened economic uncertainties in these economies can reduce discretionary travel spending and weaken growth in these countries. But most Caribbean economies export relatively few goods to the US, with the exception of energy products, so that direct impact would be limited. But tariffs could impact in other indirect ways, such as through exchange rates. Several Caribbean countries do peg their currency to the US dollar or actively manage against it. And a depreciation in the US dollar would make tourism, services, and good exports more price competitive relative to destinations with floating or stronger currencies, potentially supporting visitor arrivals. But on the other hand, a weaker US dollar could increase the cost of imports for non-US economies. So it's really a double-edged sword depending on which way you look at it. But overall, I think the net impact would depend on the relative strength of the tourism boost versus higher non-US import costs for the US dollar.
Customize your data experience. BestLink now offers an interactive company dashboard that provides company-level intelligence in a fast, user-friendly interface featuring interactive tables, charts, and Sparkline performance histories. Customize the dashboard tiles to prioritize the insurer ratings, data, and analytics that best support your workflow. AM Best. Our insight, your advantage.
So what are you expecting for the Caribbean region in the way of GDP growth?
So according to the IMF's October 2025 projections, tourism-dependent economies are expected to slow slightly from 2.3% in 2025 to around 2% in 2026. I think the slowdown is going to reflect a continued moderation in demand in tourism following the strong pandemic rebound. For commodity exporters, Those include the countries of Guyana, Suriname, and Trinidad and Tobago. That group as an aggregate is expected to expand by 6.1% in 2025, but this number is pretty skewed by Guyana's rapid growth. If we exclude Guyana, the outlook is more moderate for commodity exporters, with Suriname growing by 2.7% and Trinidad and Tobago growing even slower by 1%.
Thank you, Anne. Bridget?
Thank you.
That was Director Bridget Maehr and Director Anne Modica. You can find the full report online at ambest.com. For AM Best TV, I'm John Wepper.
Looking to get the full attention of the insurance industry? We have the platforms that will do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day. Find out more by calling AM Best Advertising Sales at 908-439-2200, extension 5399, and have a great day.